Yo, yo! What's going on? How's everybody doing? ¿Cómo está usted? My friends, my people, what's going on in the hood? Guys, let me know where you're coming in from. Let me know who you are. Where are y'all coming in from today? Hot damn. Welcome everybody to the big show. Hey Clap, how you doing, brother? What's up, Mr. Grassmeyer? How you doing? Good, Mr. Clark, what's going on? Josh, how you doing? Connecticut in the house. Mr. Doug King, good to see you. Jared Champagne Campaign. What's up? Mr. Turner, hot Alabama. You guys winning all this year or what? The Big Kahuna. What's up, man? Coming in from Hawaii. How do you trade out there, man? I spent some time in Hawaii, waking up at 3 a.m., even for the views, was not my cup of tea. H-Town. Man, we get so many students from Houston over the years. Good to see you. Awesome. Calgary, Kevin. What is up? Man, that's awesome. Good to see everybody. It is a pleasure. We got people from Portland. Oh, man. The Chirac in the house. Czechoslovakia. Cool. Well, then we got a lot of stuff going on here, man. People from all walks of life, all trying to get a little bit better, make a little money, and hit their goals. We're going to be able to, I think we're going to learn a lot today. So, for those of you guys that have been in our past webinars, usually what we do is, we kind of break down a particular trading pattern or, a particular setup like in the morning or afternoon. But what I wanted to do today was take what I think is kind of the sum total of all the mistakes that we make as traders, right? The 7 deadly sins that we make as traders and really talk about how to avoid them. Because, one of the things that happens with trading and with anything that we do is that in the end, we're all trading the same damn chart patterns, right? We all know what a breakout looks like, pullbacks and moving averages. We all know and are looking really at the same thing, right? You get some hot stock, it's about to break out, and it looks really hot. Everybody's talking about it, blah, 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 blah. Yet why do 2 people make money on it and 8 people lose money on it, and the thing goes up all day? And I see that happen all the time. I was just talking to one of my students, Big Charles, and I'm like, how was your day? And he's like, man, I was short this NVIDIA, and he's like, it dropped like 8 points. And he's like, I shorted it all day. And I'm like, oh, that's good. You must have killed it. He's like, no, I lost money on it, right? And it was like, well, if it dropped all day and you were shorting it all day, how did you lose money on it? Well, how we lose money on things like that, even when they're obvious or even when they go in the direction that we want or have planned, is that we make mistakes during the trading day. We make mistakes in our trading pattern that have nothing to do necessarily with our ability to see the pattern, but has more to do with our mental and emotional ability to act on that pattern with confidence and with discipline by following our rules. And that happens with anything in life, guys, right? I mean, we know, right, what good leadership looks like. Yet there's very few good leaders out there, right? We know what it takes to, right, stay trim and be healthy. Yet, right, we're all guilty of it. We dive into a little pizza party a little too often, right? We all know that a little siggies and a little cocaine parties are bad for you, yet we sometimes do it. Because in the end, we all know what a lot of this stuff is, but we just can't do it. So what I want to do was take this webinar and sit there and talk about what the heck gets us in trouble, how to identify it, But then more importantly, like, how do we actually get past it, right? How do we get past it, and how do we move forward? So let's dig into this real good. So for those of you guys that are not familiar with me, I'm the big boss at this company, Bulls on Wall Street, Kunal Desai. You know, man, I've been doing this for a long time. So we launched this business in 2008. Still here, trucking, still here, putting out the fire for you guys because, frankly, this is what I love to do. We're going to talk about our trading sins, why we should care about them. We're going to talk about and analyze, is that even the right word, right? All these trading sins, how it affects traders. Then we'll go through some trade reviews on the actual trades that I do on some of these things and how we can combat them. Guys, you know, when you're a retail trader, like somebody that's like at their job or somebody that is, right, trying to make it as a trader, and then there are people that are professional traders. Even the professional traders make these mistakes, and they make them all the time. The difference is they don't make them every day, all day, right? When we're new, these 7 deadly sins, we do them all day. But a professional, they can limit it to maybe once or twice a week. Because in the end, we still are always going to make mistakes. It's more a matter of, can we limit them so that we're not doing them necessarily all the time? And that's going to be huge for everything that we do. And I'll give you a special boot camp bonus. As you guys know, we do 60-day boot camps. They are all intensive. They're the best way to learn how to trade. You cannot learn how to trade just hopping in somebody's chat room and watching a couple of their, right, a couple of their videos. Or you can't learn from, you know, Instagram lives or people posting on Twitter. You're looking at somebody's face, right? To learn how to trade, you need an all-intensive class that is designed to take you not only learning trading knowledge, but then how to apply it, right? And that involves practicing it, learning it, practicing it, having somebody give you feedback, and doing all that. And so we'll have a special bootcamp bonus for you guys because, as you know, in the beginning of the year, I always launch a new bootcamp that is always a little bit extra on what we do so that people can start off the new year hot and really hit their trading goals for the year. I've had some crazy good students this year, and I'm really pumped to see who I got in my next group. So, guys, I'm the CEO of this company. I believe I'm the best at what I do at this job. You know, I've been all over the world this year speaking at conferences, talking to people, not just about trading, but actually how to learn trading, right? And I think that's going to be just as important as everything that we do. So, what are the trading sins? The trading sins are the emotional and psychological mistakes that we make as traders. They're also just habits that incur because we're human. We're greedy people, right? We're gamblers, right? We have fear. Everybody lives in fear. We have egos, and those things come about in our trading, and they end up hurting us. Oftentimes, you know, my mentor used to say this to me, Paul. You guys will see him all the time doing webinars, and he does our part-time trader service. You know, one of the things that he used to tell me all the time was, look, whatever your demons are in your personal life, they show up in your trading. Meaning if you're like a habitually late person, that shows up in your trading, you end up late on your trades. If you're an over-anxious, hyperactive person, that shows up in your trading. You end up over-trading. You end up in, out, all over the place. I am actually, that's always been my thing. You guys can probably tell, right? I'm a little hyperactive. So those things show up. So we've got to identify them, and then, of course, we've got to manage around them. Look, I'm not in all this self-help bullshit, right? Like, in the end, we are who we are. You can't just, right, read some Tony Robbins books, right? Look at some motivational quotes on the Instagram, right? And all of a sudden, you're, like, just healed as a person. No, I mean, we are who we are. We're animals. But what we got to do is try to limit these things as much as we can so that it doesn't hurt us as much as it would, right? We can't completely get rid of it, but we can minimize it and make sure that it doesn't end us, right? Why we should care about this stuff? Because it becomes account destroyers. Met so many students, thousands over the years, that have blown up accounts so quickly. One mistake begets another, that begets another, and before you know it, right, momentum works both ways. You have positive momentum, and you have downside momentum. And that becomes really, really important, right? Most people impose poor risk management strategies. Look, in a bull market, a bull market will cover up a lot of mistakes. You can jump into some dumpy stock, you might be wrong on it, and next thing you know, a couple days later, it's just higher than where you were because the market is doing that. This last couple months, we have been in bear market style trading, bear market style conditions, and I suspect that 2019 is going to have a lot of volatility, a lot of emotion. It's going to have some crazy, crazy moves, and if you are not precise and don't believe in precision, you will not survive 2019. Bear markets, like nasty ones, come about once a decade. We're getting into that phase where they pop up. And it doesn't mean we're going to tank or have a crash like 2008. That was probably a once-in-a-lifetime kind of thing. But it doesn't mean that we can't have just a nasty, nasty, volatile situation where your trading has to be so precise, your mental and emotional abilities to have discipline and carry it out, your trade plans, is going to be key. You could have the best trading setups in the world, but if you do any of these trading sins, you still lose, right? You can be in the chat room with some guru, and he could be the best ever. But if you still can't figure out how it all works and do it with discipline, right, and do it with a plan, you're still not going to make money, right? And these trading sins remove your consistent edge in the market, right? So the 7 sins of trading, we're going to go into each one of them individually and come up with a plan for them. Number 1, revenge trading. We all do that, huh? Right? You treat a stock like she's your ex-girlfriend. Number 2, gambling. Number 3, emotional attachment, right? Falling in love with the stock. Number 4, slothfulness. Number 5, FOMO. Number 6, fear. And number 7, this one gets us a lot, right? Ego. You know what? Ego is an amazing thing because, even when you suck at everything in life, you still most people have an ego about it, right? Some of the people that I've met that have the biggest egos in the world suck at a lot of stuff, right? It is a sin. So let's talk about trading sin number 1. Man, I think this is the hard one. This is the easiest way to turn a red day into just something that could blow up your account. And it involves one or more losing trades. This is when you start to get emotional and force trades based on emotion. You guys know the revenge trade, right? This is the revenge trade that happens, right? It's like you're in a stock, and right now I'm just bringing up any stock, right? I was looking at one of my students' journals and I saw this. And this is like the classic revenge trade. So like all my students send me trading journals. And so like I could see like what they're up to all day. And so like one of my students, he had thought the market was going to bounce today. So like when this NVIDIA was going sideways, he longed it, meaning that he thought it was going to bounce. And then all of a sudden it didn't bounce, right? So all of a sudden, he got stopped out of the trade and took a loss. So he took a loss down here, and you know what he ended up doing? He ended up shorting it because he's like, oh shit. I ain't gonna name any names, but he's in here, right? He said, oh shit. Like I should have been short. So, and the market's down a lot. So, he ended up shorting it down here. the thing went down a little bit, and then guess what happened? All of a sudden, it started to ramp up, right? And by the time he took his loss, he took a couple dollar loss on this thing, and he's like, oh man, like I had it right. It was long the whole time. But he took a revenge trade shorting it after he was long. And then what ended up happening was, now this thing was going, and it was going, he ended up missing this whole run. But later on, as it was going and it was starting to dip, he kept longing it. It was a revenge trade. And then next thing you know, he shorted it. And then it broke back over the VWAP, and he's like, oh man, I covered it. And in the end, he had gone long and short so many times, right? We call that in the chat room flip life. You're long, you're short, you're long, you're short. You don't even know what happens. But what usually is happening with these things is, guys, it's like you have the right idea. It goes the other way. So you flip it and you short it. And then it starts working in your favor, and you know what happens? You're like, shit, I was long in the beginning. I got to long it, but it's too late. So now, right, you're buying high, selling low, shorting low, covering high, and now you are on the spin cycle of despair, right? We call that the washing cycle, right? The spin cycle of despair. And that's what really will get you guys. Good Lord, right? That can happen to all of us. It's where we just force trades based on emotion and get that spin cycle going. Guys, revenge trading can take a new trader out of the game for good. A lot of times what happens is like we have like this awesome game plan. We know exactly what we want to do. Then the lights turn on, the market gets wild, and we just throw that plan out the window. And next thing you know, we're just long, short, long, short. And this is what's called recency bias. Anybody know what recency bias is? Recency bias is essentially, right, like whatever just happened recently is how you think of it. So, like when a stock is going up, guess what happens? We think that it's a good stock, right? And so we want to buy it. And then when a stock is going down, we're like, oh shit, it's bad, right? And so then we want to sell it or short it. But then what ends up happening is because of that, we're always late to the party, right? We're reacting to price versus, right, sticking to our trade plans and trading around it. And when you get into a situation where you are reactive all the time to what a stock or a market is giving you, then you're not going to be able to get ahead. And once you spin out of control, you may not want to come back, right? We only get a handful of opportunities to do things right. And what happens is when we don't do them, they weigh on us. So there's second chances and third chances and fourth chances in trading and all that stuff. But when you come back and you've repeatedly made these mistakes, it's like you got trading PTSD, right? You have those like bad memories faded into your brain, and it's really hard to get past them. And so you want to just always remember to be super methodical with this type of trade. And you know what? And I'll tell you, the revenge trading is such a hoe sometimes. I did this personally to myself. This is on Friday. On Friday I had a nice little profit going, and the market had gapped down quite a bit on Friday. The market had gapped down quite a bit on Friday, and this TVIX had gapped up. And usually when you get a gap up like that, it's really bullish for a particular thing. TVIX shorts the market, right? And so, I had this thing, and I took it for a breakout over here, and we took it for a breakout here, and I had a nice little pop, maybe a buck. I had 500 shares, so I was actually up on this bad boy, about 500, 600 bucks. And then what happened is, this thing just came right back down and stopped me out, and all of a sudden my 500 bucks is down to right $0, and I'm like, all right, so I sell this thing. Next thing you know, it starts to pop up, and I'm like, oh shit, there's a flag, right? And next thing you know, it pops up like a buck, and then it comes back down. I stop out for a small loss, and next thing, it kept doing it, right? Every time it spiked, I'm like, oh, this is it, right? And I've been trading okay all week and managing the market volatility. But it was Friday. I was thinking, man, I want to have that big day. And you know what was lulling me into wanting to have the big day? The market was down about 500 points on the Dow and about 2% on the NASDAQ or something around this time on Friday. So I'm thinking like, man, I should be shredding right now. Like I should be up so much money right now, right? That it's stupid, right? When this is a market crash. I should be crushing it. And that wasn't happening. And so next thing you know, like I re-entered this thing and took like either a flat trade or a small loss like 3 times. So like I hit it again here on the trend line break, popped up and it got back down. And then like it did a flat top breakout here and it popped up. I was up $1 on it. And, and you know what? Next thing, this thing came back down. And I ended up taking like 8 trades of this bad boy. Right? Because it was like, because originally I'd given up my first $500, $600 gain on it. And then, so the next time, like it was like I wanted that $500, $600 back. And so then I'd be up a little bit on it and it would turn into a flat trade or a loss. I'd be up on it a little bit and then it would turn into a loss. And this happened to me over and over because I was so angry about the first trade, right? I was so angry about it on the first trade that it ended up putting me in that spin cycle where I'm like, I just kept hammering it because, well, frankly, right? I want to make my money back. And I think that's where you really got to just be careful with this stuff and really be mindful of what's happening, how to avoid this stuff. You know, number one is use a daily max loss. So this really saves me. So like for myself, you know, what I have is like, you know, if I'm, and I change it all the time. But on any given day, like I have a daily max loss where I just, $2,000 is like my max limit. I put it into my platform, like my trading platform, so that if it happens, like I'm not in any positions. And so what the software does is it takes some of the thinking out of it for me. Because in the past, I've had 10,000, 20,000, even bigger losses, all because like when you're in something, it starts dropping, what happens? It's like a deer in headlights. You start freezing, right? And all of the sudden, man, you're not going to be able to do what you got to do. So that's huge. And so we can't even fathom that. So that's going to be huge. Use a daily max loss. Put it into your software or have somebody that is like an accountability partner. You know, like not everybody has a personal trading mentor, right? You know, sometimes it's too much money or just not worth the time. I totally get that. But you should all have like an accountability buddy. You know, I got a buddy of mine in New Jersey, Indian guy, right? Indian people, for those, who's an Indian around here? Indian people, notorious gamblers in trading, the worst. The reason Indian people are notorious gamblers in trading is normally because of their moms. See, Indian people are not allowed to do anything when they're kids, right? Their parents are always telling them, don't do this, don't do that, don't do this. So then what happens as they grow older, they just want to gamble all the time. I see it happen a million times. Not me, but I see it happen with all my other students. So what typically happens, right? You need accountability partners. So like one of my students, we'll just call him DJ F, right? He's just gambling all sorts of trades. I say, you know what? This is what you're going to do to stop the gambling. Every day, you're going to take your trades and show your wife. You know, show your wife. Because you know what? She's going to yell at you, right? She's going to... You're not going to gamble anymore if your wife sees your trades. And see, that is accountability. See, you should be open with what you do. If you are trading, show your wife, show your mom, show your dad, right? Have the accountability of family to get you there, or a friend. But what happens is when you just do stuff on your own and it's in secret, that's bad. Secret means gamble. But if you trade in front of other people or you're always around your family and you show them, yeah, you're not going to gamble. Who would gamble if they knew their wife was going to look at their trades or their mom is going to look at their trades? I wouldn't. Never, right? That's a bad move. Another way to avoid revenge trading, stick to your rules, right? Have a set of rules that like you write down that you are aware of. So like for me, like I'm always leaving myself like sticky notes, right? Of like different things that I have to do. And I change them all the time, but like different things that I need to do or be aware of during that trading day, right? So like, for me, like this is one of them, right? Like I have to have certain things that I'm running in terms of scans or charts during the day, like things to remind myself of. That becomes very, very important, right? If you don't have a set methodology, you don't have a set group of rules that govern who you are, then you're just living like an animal, right? Like you're just doing whatever you want, man. You're just lawless. And we know what happens when that goes down. So that's going to help you keep your red days under control. Trading sin number 2, gambling. Woo! Gambling is addictive by nature. It's trying to make money without effort. Taking a trade based on hope or based on greed never works right. It may work once. You take a shot in the dark, right? You just I'm just going to try it out, right? It may work once, it may work twice, but eventually you will get burned, okay? Over time, when you take a gamble trade, and a gamble trade is something that does not have good reward to risk, it's something that doesn't have a good pattern, that becomes huge, right? How to avoid gambling trades. Use risk management rules and stick to it. Like for example, you may say to yourself, like, I'm only going to be able to enter XYZ stocks so many times, right? Or I can only enter on these type of patterns. The best setups happen when you align daily and intraday charts, right? Daily and intraday charts, and know your entries and exits. Guys, gamble trades can be so tricky. Like, I see them all the time. Like when you gamble, when you have gamble trades, it happens with small cap stocks, like just like retardo style. So, like for example, like something like this. So this is like ADIL, right? This happens a lot in small cap stocks. Right? This thing's like a buck, right? And like it starts to go up and it starts to go up, and you know what happens? Like next thing you know, like when you see something like this, you get so excited, right? And you end up, like say you missed it or you didn't even know about it, and before you know it, right? Like you've chased this stock up so high and it's game over for you, right? I had the same thing happen. Like we have I trade cryptocurrencies, right? I saw the same thing happen. Like when you saw like Bitcoin at 20,000 or like so many of these other like crypto, and the main one has always been XRP, right? So like the main one's been XRP that people love gambling on. But like when the market is like flying, like this is like a daily chart of like XRP. I got so many emails. So like as this thing was like 5-10 cents and it started to run up. Once it started to like get to like $2-3, I used to like get like email after email from people saying like, hey, I've heard like this thing is going to be like $50 or $100. Should I just throw some money at it, right? And all of a sudden, right, people are going in for like that shot in the dark. They're going in for that gamble trade because, right, they're just thinking like this is going to be the time where I'm going to get rich, right? And they know, most people, the reason they call it the gamble trade is that when people take it, they know it's stupid. But they're thinking like, what? See, the pain of the loss is less than the fear of not getting the gain, right? The pain of the loss, people can be like, they can rationalize it. But that opportunity where you could have got something and it exploded, that's hard to live with. And so what ends up happening is we take these gamble trades And this is how it always starts. And I know when people are doing it. You'll have a stock and it's going up, and I'll ask one of my students, like, why'd you get in that? They're like, oh, I just took it real small, right? I just took it real small. Well, if you took it small, that means that you didn't have any faith in it, right? If you took it small, it means that you didn't really like it. It's a gamble trade, right? That's your shot in the dark trade. And that's what we got to stay away from. And you'll see that in, stocks, cryptos, whatever, that last gasp, right? Gamble trade, right? The guy that's buying, right, Bitcoin at 17 or 18,000 thinking like, man, this is going to be it. Those guys, right? It never works like that, right? And we trade cryptocurrency a lot, long and short, but I never marry these things. I know these things are hoes, right? We just trade charts. We trade patterns, and we go and do what we want. But when we start thinking to ourselves, this is it, this is what's going to make us rich, or this is what's going to make us this or that, then it's all over. Emotional attachment. Okay. Guys, this one is huge, right? This is when you get attached to the performance of a stock, right? It's like you're just in love with this thing because you've read about it, or like one of your friends told you about it, or somebody smarter than you said something about it, and like you're just like deeply emotionally invested into this stuff, and it becomes really hard. People always ask me like what time I get to my desk to start trading. And guys, give me a guess. What time do you think? So market opens at 9:30. What time do you think I get to my desk? Give me a guess. I'm sure some of you guys are hard workers. What time do you think I get to my desk? Oh yeah. So you'd be surprised. I get to my desk 45 minutes before market opens. Never before. And the reason is that, like, I used to get up real early and go straight to work, right? I still get up early and do what I got to do, but I never get to the desk and sit there and stare at the charts. Because what happens is, if I get to my desk hours before the market opens, all of a sudden, I become really emotionally attached to stuff. When I was a new trader, like, I used to read a lot of news. And so what happened is, like, I would read all this news on a stock, and then I'd be like, oh my God, like, that's a really good stock. Like, and that's very subjective, right? What's a good stock? A stock is only good if it pays you, right? If it doesn't pay you, then it's not a good stock. So, like, I would read this news and be like, but they signed these contracts, right? Or, like, you see it in cryptos with XRP. People would be like, but they got these deals with these banks, right? And you always have, like, this excuse, like, you're really emotionally attached to it. So what happens is, like, when you get to the computer too early, or you read up too much on the stock, imagine you spend hours studying about a stock. That stock's your friend. You spend more time with that stock than you did your girlfriend, your brothers, your sisters, whoever, right? All of a sudden, you and that stock are married. I mean, you just spent 2 hours reading about that damn stock. So what's going to happen? You're going to be emotionally attached to it. You're going to all of a sudden, like, it could be going down, and you're going to say, no, this is a good company, right? This is a good company. You're going to say, like, oh, but their CEO's got these new contracts. Or, like in cryptos, right? It's like, well, they got these deals with these banks. It's like, get the fuck out of here, right? Like, no. No, they don't. In your head, they do. It doesn't even matter. You know what's a good stock? If I buy something and it goes up, that's a good stock. If I short something and it goes down, that's a good stock. But whether they have contracts and CEOs and this and that, it doesn't really matter. Sometimes you want to be right instead of rich, and you become a bag holder, right? And you lose rational thinking, and that's so hard. A lot of times we want a stock to really go our way, and we just don't want to be wrong, and then we end up holding the bag, right? And man, I'll tell you what, you don't want to be holding the bag. The only thing I hold in my life is my own nuts, right? We don't want to be in that game. So think like a machine. How do you think like a machine, though? That's easier said than done, right? Like we're humans. Well, it's about having trade plans, right? It's about having trade plans and understanding that a stock is just a ticker. It's got 3 letters, it's got 4 letters, whatever, right? But it's just a grouping of letters, and it's as good as it treats you, right? Stock's going up, it's good, right? Stock goes down, bad, right? And I'm being a little short with you guys, but right in the end, that's the simplistic way of looking at it. Now, there's always different caveats in terms of patterns and things we do, but that's going to be really important, right? Trade based on math, your plan, and the setup. What's a trade setup, guys? A trading setup, which is just a pattern, is a list of conditions that must trigger before a trade is taken. A list of conditions that must trigger before a trade is taken. A trade is no different than a recipe in a cookbook. All right? You have a certain trade you want to do. For example, like in our trading bootcamp, we teach our first pattern we teach is a flat top breakout. Right? A flat top breakout is essentially right a tabletop breakout. And it's got a few things that go with it. 9 EMA curling up under it, volume accumulation, so on and so forth. So that pattern has a list of conditions that look just like a recipe. And what happens is when a piece of that recipe or that trade is missing, it ends up being a loss. And that's how you have to think about your trade. What are the rules or what is the recipe for my trade, for this type of trade? And if you see all the different tenets in it, then you can take that trade and also you can repeat and rinse that trade. See, a lot of trading is about, can you duplicate the process? Can I duplicate it 100 times? Can I duplicate it 1,000 times? Right? To do that, you need a recipe, right? You can't duplicate buying something on a whim. You can't duplicate buying on a tip. But what you can do is have a set list of conditions, a recipe for each trade, and then duplicate that. And then duplicate it over and over and over. And as market conditions change, you may alter your recipe a little bit, but you're doing so with a plan versus just acting on a whim and doing it for the sake of doing it. Remember when you have this kind of stuff going on, remember your risk management rules. We never want to lose 1%, more than 1% of our portfolio on a particular loss. We never want to lose really more than like 10% on a particular type of trade. And I'm just giving you a random number, but everybody's got their own stuff. Stops losses always go under supports on the time frame that you're trading, and use physical stop losses. That takes some of the emotion out of it. See, what happens is when a stock is going down or a coin is going down and you're watching it go down, you get really emotional about it, right? But if you have a mechanical order in that says, hey, if this thing goes under $2, I'm going to sell it. This thing goes under $50, I'm going to sell it. Now you can move free. Now you can move without thought because you have somebody backing you up, right? You have this mechanical order in from your broker, and that's going to keep you out of trouble. Guys, emotional attachment can be just, man, it can be so nasty sometimes. Slothfulness. This I'm guilty of too, a lot. I'm not a lazy person, but what typically happens after we go on a nice run in trading, maybe you're like, have a nice week trading. You know what happens? Say you have a nice week trading. All of a sudden Friday, you're like, yeah, this is nice. A nice week trading. Things are good, right? You're going to go out, have yourself a little partay. And then you know what happens when you have yourself a little partay? Because you just treated yourself to your nice week of trading. What happens on Saturday, guys? When you feel a little hungover. What's the best way to get rid of a hangover? Get back on the horse, right? So now you're back on the horse, right? You're cruising around, making the moves. Before you know it, it's Sunday. You've treated yourself. Now you're hungover. You're thinking, man, I'm a little hungover. I'm going to have myself a little pizza party today, right? A little hangover juice. And then next thing you know, you wasted all your Sunday. Now Monday comes on, you're thinking, woo, well, I'm just going to do what I do. Turn on my computer. I'm going to get to the computer and shred, right? I just made all this money last week. Now you're a little step slow. You haven't done any of your routine. You haven't done any of your journaling. You haven't done any of the legwork that you were doing when you were really in sync with your discipline, with what you're trying to accomplish. Never works. Guys, this never works. And in day trading, it's an epidemic. See, in day trading, a lot of times we trade gappers. You guys know what gappers are, right? Gappers are plays that have fresh news out or earnings out. It is a huge part of our strategy. So the thing with gappers is you can't do that homework at night. You have to do it, you wake up in the morning, you see the gappers, and then you make the plan for it. Well, that's a small portion of what we do, though. But a lot of times, like a lot of my students, what I've seen is they wake up, and they get up, and they just turn on their scanner, and their trade ideas, right, or whatever they're using, TC2000, they run their gappers, and they think they've got themselves a day planned out. But do you? Is that it? Is that all it takes to be a good trader? You just wake up, turn your friggin' scanner on, and all of a sudden you can just make all this money, just gonna make it rain? Right? Now, a great trader is no different than an athlete, a professional athlete. There are things that they have to do to get ready for the day, to be able to shred. And it's not just your trading work, right? It's the mental work and the physical work that takes place, right? And so you can't just wake up, turn your scanners on, and all of a sudden think, like, oh man, I'm going to make some money. Doesn't work like that, right? At nighttime, you got to do your scans. When I talk about doing your scans, I'm talking about, right, you're going to go through all the momentum stocks. You're going to go, like for us, we have different scans we use, right? So like in the morning, it's, at night, like I got to go through my liquid gainer scans. I got to go through my top loser scans. I go through my 90-day Momo scans. I like to see, like, what are the stocks that are up the most the last 90 days. So I got to go through the scans to see, like, what's moving, what's hot, and what's in patterns. That's my nighttime homework. The second part is you've got to do your actual trade journals, right? If you don't have your data, like, how are you going to get better, right? So, like, I have, like, all different students I work with, they'll send me their trades. This becomes huge. Like, I've got to be able to see what people are doing, right? If you're not sharing your trades with your mentor or a friend, man, you're shit out of luck. I mean, you really are, because how are you going to get better? If you can't compute your data, you can't compute, like, see this guy, CKZ? This is my student. Chris Connolly, my student. Jance, my student. Blake, my student. See all these guys putting bows? These are my students. They're posting not just a few trades, but thousands of trades. Thousands of trades. And I can go in and see their trade. Like, I can see, like, what they did and how they acted, so on and so forth. If you're not doing that on a daily basis, then you're not doing your prep work that professionals and even people that are better than that are doing. So then where are you? Where are you? If you can't do that, say you're broke and you can't even do the minimum legwork, and people that got 1,000 times more money, 10 times more experience, and 50 times more brains than you, they're doing that work. Where are you? How are you going to be better? How are you going to compete? You can't compete. You're dead, right? You're dead to the game. In the beginning, the one advantage you have that you guys can really act upon is, frankly, your work ethic. See, there's a lot of different things. There's going to be people always that have more money than you, right? There's always going to be people that have more experience than you. But the way to even the playing field for you is just an intense amount of focus to your plan and an intense amount of hard work. The type of hard work that makes people think, like, this guy's fucking nuts. That's real hard work. right? The type of hard work, like when you get up, like where you're like, you're tired. Like when you get up, like you fall asleep. Like I never have, people always ask me, like, man, you're so hyper. Like, how do you fall asleep? I go, by the time I hit my bed, I'm dead. Because I've really worked a full day, right? And if you really work the full day, then you never worry about sleep, right? You got to outwork people when you're brand new. And so that becomes doing that journal, sharing that journal, sharing the trades. Guys, if you have trouble trading right now, if you're not hitting your goals, and you ask me for help, and I say, what's your win percentage, and you don't know, you've got a problem. If I say, what's your win percentage in the morning versus the afternoon, and you don't know, that's a problem. If I ask you how you trade on the days the market is up versus the market is down, and you don't have exact percentage, you just kind of give me like, oh, well, I'm pretty good, then you're not in the game. These are the things that the pros do. These are the things that we have to do. So these are the things that you've got to be even better than everybody else. You got to remember that you are trading against the smartest, the most crooked, the most well-capitalized people in the world. So if you can't even outwork them, how are you going to even the playing field? So we got to get used to that, right? Slothfulness is like you just come up. I see this all the time. You come up, you subscribe to a chat room, right? You're thinking like, man, this guy's so good, right? Or this guy's so good, or this guy's so good. Come in the chat room, you just start following their picks. You don't do any homework. You don't do nothing on your own. You're not thinking for yourself. That ain't going to work. Most of those people that have those rooms suck anyways. Underestimating your competition is huge, right? Just know, if you ain't working, somebody else will, right? I always think about that. I go through charts all the time. And even when I don't want to go through charts, I'm always thinking, man, like if I'm not doing it, man, one of my students is going to be doing it, right? One of my students is going to be out there seeing more charts than me. How's that going to work? Right? You want to take the title, you got to rip it out of my hands, right? So I got to outwork you still to this day. Avoiding the proper processes needed for trading. When you're slothfulness, you just wing it. You see something, you buy it. You don't have the plan. And that's going to be just huge, all right? Guys, never follow people based on somebody's alerts, somebody's watch list. These are things that can be a guide, but they're not things that you just do, all right? It doesn't work like that, right? Look at 1,000 charts a day. I'm dead serious on this. You got to look at 1,000 charts a day. Sounds like a crazy number, right? It's not. S&P 500 has 500 charts. You have the NASDAQ, right? You have small cap index. 1,000 charts, very easy to get through. You should have 200, 300 charts of just companies that you follow all the time. You've got to go through 1,000 charts a day. Why? Does anybody know why you got to go through 1,000 charts a day? Who knows? This is very, very important. Hey, Hakun, that's good. You want to go through 1,000 charts a day for a very particular reason. Number one, it gives you a pulse on the market. See, when you look at the market indices, you don't necessarily know what's happening underneath the hood of the market. For example, if you look at the NASDAQ, Apple and Google and a couple companies control the whole NASDAQ, right? So you don't see what's going on underneath the hood of the market. Jacob knows. That's one of my boys, right? He's the Hebrew hope of New York. Number two, when you're going through 1,000 charts a day, you start to see patterns. You recognize patterns because you're going through them. So like this is how I go through my charts. So like if I'm going through like my top gainers list or my list, so I have the daily chart on the left and right, I have my intraday charts on the right. So what I can start doing is start eyeballing patterns that may have worked, right? I'll be like, oh fuck, like I could have hit this thing here. I could have done this, I could have done that, right? And I'm starting to train myself to patterns that are working in this market, in the current market. And that's bigger than anything that you can do, all right? So that's a big thing. You got to go through 1,000 to see what's really running in this market. The second part, or the third part, is this. It's all about screen time. If you can do 1,000 charts in a day for a year, how many charts is that by the end of the year? 200,000. What happens after 5 years? That's 1 million damn charts. Think about this. Is there even a possibility you could not understand chart patterns if you went through the process of going through 1,000 charts a day for 5 years? You'd have 1 million charts under your belt. Imagine if you took 1 million basketball shots, right? 1 million free throws. Would you be pretty good at it? Hell yeah, right? Imagine you're playing ping pong or pool and you took 1 million shots at it. Would you be pretty good? Yeah. Even if you weren't that athletic or that coordinated, over time you would just build that muscle memory that's needed to be good, right? And so going through charts is not just about scanning, it's about that pattern recognition. It's about getting better. It's about seeing the action and having a pulse on the market. Scanning is just a small part of what we do as traders, right? Scanning is just a small part. FOMO. Y'all know what FOMO is. Who knows about that FOMO? FOMO is that fear of missing out. When everybody else is making money, and you ain't making any money, FOMO, right? FOMO is the worst. It's worse for new people because, man, you're always, when you have FOMO, like you see other people making money, right? You see other people doing stuff, and you're thinking like, fuck, that guy's an asshole. Like, I should be making the money, right? Or, man, that stock, like I had it on my watch list, I should be in it. And all of a sudden, you're out of the game, right? All of a sudden, you're out of the game. Fear of missing out is the worst because it ends up making you chase something. You chase something in stocks, you're like chasing your unicorns. You chase, you die. You buy high, you die. Chasing is always the cause of bad risk management. The biggest part of your risk management is your entries. If you don't have good entries, guess what happens? You're done, right? So it always boils down, if you chase your entries, your win rate will drop. You chase your entries, you're going to take more losses. If you chase your entries, you get shaken out faster. Remember that this is kind of the way that things go. So when you think about trading and you think about like chasing entries and stuff like that, remember that like after, in any given stock, after 4, 5, 6 green candles, say you're buying a stock, inevitably you get a pullback, right? So what'll happen is say you see this MBEV, right? And it comes off a flag pattern or something like that. And you see it run 4, 5, 6 candles in a row, right? You're like, oh shit, man, this thing is going to explode. And you buy it after 4, 5, 6 green candles. Next thing you know, it's going to drop. Right? You're going to retrace. Stocks only run up for so much before they retrace, and that becomes really, really important. So think about that, right? Anytime you chase something after it's already been running, then the bottom will drop off. Anytime you buy high, stocks will retrace. Your job is to get stocks as they're consolidating, always while they're consolidating, right before they go. Stocks get their power from consolidations. They get their power from basis. They get their emotional intensity from the resting periods that come while the pattern is resting. All right? That's the most important thing I can always tell you. Stocks get their power from consolidation. Stocks get their power from basis. It's those consolidations that give you the inflection points to go and do what you got to do, right? And that's always going to be the case for really anything, anything that you do, right? You want to always get these things while they're consolidating right before they break out. But if you get them after 4 or 5 green candles in a row, they're coming crashing back down, and that's when you get it. FOMO will get you. FOMO will get you. What you have to do when you get in a trade, this is what I have to ask myself when I'm getting the FOMO. Ask yourself this. Repeat it to yourself out loud while it's going to you. Ask yourself, am I getting into this trade because it is a good setup? Or am I getting myself into this trade because I want to make money? Usually if you say you're getting into the trade because you just want to make money, it's a FOMO trade, right? So ask yourself, anytime you think you're about to chase, just ask yourself, am I getting into this trade because it's a good pattern? Or is the pattern over, right? And that's going to be really, really important. Solutions. Only trade stocks on your watch list, right? Your buddy throws you a stock and you didn't prepare for it. That's all right, right? You did your homework. Maybe you won't get your awesome winner, but you won't get any FOMO. Trade your own stuff. Trade your own watch list. Build out your scans and do that today, right? Set a range where you want to enter these trades. No trade criteria. If your reward to risk is less than 2 to 1, take the trade off. If your stop loss is greater than what you potentially could make, take your trade off. And then, of course, I think the biggest thing for FOMO that can help you in a mechanical way is to just do limit orders. See, when I am using a lot of market orders, it means I'm in a rush to get in a trade, right? You do market order, what are you doing? You're in a rush to get into the trade. Well, if you're in a rush to get in the trade, what does that usually mean? That you're late, that you missed it, that you need to get in it. So I use limit orders almost always. And what that does is it prevents me from trying to chase something and get into something because I can't, right? I can't market order and just immediately be in. I got to put a limit, and that actually helps a lot. You know, if you're really getting crushed on FOMO, move your pattern to limit-based orders. What is trading fear? Being afraid to enter a trade, not executing on your trade plan, stalling or freezing during trade, or having high emotional influence on your trading. Fear of losses, fear of wins, fear of anything is just huge, right? As human beings, we're self-saboteurs. And so we always have a healthy fear of all sorts of stuff. It's actually natural. It's a great emotional response, right? I mean, we friggin' evolved from having lions run around chasing us with, friggin' God knows what, right? So fear is natural. But when we have fear of making trades, that comes from a handful of things. Fear from making trades is for a few things. Number one, people become afraid to make the trade because they're risking money they can't afford to lose, right? If you need to make a trade so that you got to pay your mortgage, that trade's not going to work. If you got to make a trade and you're pretty brand new, you got to make that trade to pay a bill, that trade ain't going to work. When you're trading with money, and we've all done it, right? It's the Hail Mary, that shot in the dark. I lost my job. I didn't get my promotion. All of a sudden, right, I'm going to try this trading thing and make a little money. Doesn't work like that. Anytime you make a trade based on what you have to do, what you need it to do, that trade's not going to work itself out, right? It'll never work itself out, right? So don't trade, especially when you're brand new, with money that you cannot afford to light on fucking fire. That's your trading money, right? The other fear that happens with people is if you don't have a proper plan, then you don't necessarily, if you don't have a proper plan, you're not going to have any confidence in your trade. People have fear in their trades because they haven't planned it out. But imagine like you sit there at night, you did your homework, you looked at it in the morning, you wrote out a plan. You're like, I'm going to hit this trade on this pattern. This is going to be my potential entry. This is my exit. This is my reward to risk. This is what I'm willing to lose on the risk in dollar terms. And then you've got yourself a plan. That's confidence. Your planning gives you confidence. Your preparation gives you confidence, right? The time spent gives you confidence. But when you don't have that and you wing that and you don't have the balls to even do that, then people like me are going to come in and take your money. We're going to take your money. We're going to laugh at you a little bit too. Because in any market, you need a bunch of suckers to come in and trade, all right? The people that don't plan, the people that don't have a plan on their trade, the people that trade with fear because they're trading with money that they can't afford to lose, they're the target, right? Those are the people we're taking money from. So always have that plan. Paper trade till you become consistent. You know, for my students in boot camp, we have set rules on what they need to show on paper trading before they can trade with real money. If you can't win 4 out of 5 days a week, if your average gain can't be 1.5 to 2 on your reward to your average loss of 1, you're not ready. Your average gain should be $150 to $200. Your average loss should be 100 or less, right? You should be able to make money 4 out of 5 days a week. You should be able to do X, Y, Z. When you have those type of stats as in paper trading, it doesn't necessarily mean you're going to make a bunch of money trading live. It means you got the skills. It means that you have the technical skills in terms of your strategy. Then the rest is about just doing what you got to do, right? Number 3, set hard stops. Hard stops will prevent you from a lot of emotional mistakes. You're nervous about a trade? Put a mechanical stop loss in the trade that takes the fear out, that takes the risk out, right? That's going to be hard. And yes, Sean, you're right. Start small. Don't trade anything too volatile for your skill level or for your stomach. Don't trade chat room pumps, right? Don't trade pennies if you are nervous, because those are the ones that have the least consistency to it. And frankly, right, you have the most chance for outside manipulation. Trading sin number 7, ego. Right? Man, ego can really get you. We all have ego, right? We all have ego. I do this all the time, right? I had this the other day on this XPO stock. You know, I have a risk manager that like helps me. My good friend Tam, he's a semi-nice guy, but he's a good friend, right? Semi-nice guy, but great dear friend of mine. And you know, one of the things we were talking about, you know, I was up like $1,200 on this particular day, right? And this XPO has been shredding all day. You can see like bear flag, bear flag, bear flag. And you know, he had told me like, hey, let's like lock this thing up. You know, let's lock this thing up and don't trade anymore. Like you had yourself an okay day. Let's just be mindful. This is a tough market, and like, hey, we've got to be smart, right? $1,000 is good money. Like, don't fight for the last couple hundred, right? Or the last few hundred. And I was like, shh, listen, bro, I'm gonna shred this thing. And he's like, what are you talking about? You had a nice day. And I'm like, no, it's not. It's not a nice day. You know what would be a nice day? 5 times as much, 3 times as much. Because in my mind, I shorted this thing like right here on this bear flag. But I had missed this thing at 58, 54, 52. I mean, this is like a $20,000, $30,000 day when you really think about it, right? You're right. Like it dropped $20 without a bounce. And so when I was shorting here, I'm also a little, I've got a pattern, but I'm, obviously I'm in the fourth bear flag. So he was right. Like, maybe you shouldn't take it. Like, maybe you shouldn't, this is like, maybe we're taking one last Hail Mary that we don't need to. And I'm like, no. This stock owes me. And he's like, why? I'm like, because, and in my head, I'm thinking, because I fucking missed it at 58 and 54, 52. I'm taking it here, right? And that ego can get you in the way sometimes. Like, in my head, the smart move was to do, right? Manage my risk, trade this thing small, and do what I got to do. But my ego was telling me, like, man, like, I've got to hit this thing, thousands of shares, and just slaughter this thing, because my thinking was, like, if I hit this thing 2,000, 3,000 shares here and it dropped $10, I'd be rich, right? But, like, it's not going to happen like that. Like, it's already dropped so much, right? And so, like, we're having a little bit of a back and forth.